choke you, but I ain't no killer, baby. She 28, telling me I'm still a baby. I get love in Detroit like Skilla, baby. And the thing about your boy is I don't need no whips and chains, and you can't tie me down. But you can whip your lovin' on me. That's right, whip your lovin' on me. Young Jay.
And the first thing we're going to clean up is this previous accumulation pattern that we caught. And yeah, so we broke out of that channel, as you can see, and we're moving up now, which is going to lead me on to my next subject. This was the last update that I posted. We could see a little whale signal coming, but that was pretty much the end of that short-term accumulation pattern. So this is the latest idea that I've posted, and if we look at the accumulation structure, okay, this is the Wyckoff accumulation structure. We can see a range being formed, the range broken down into a test, almost like a spring. We call that as a liquidity sweep or a trap. And then we break out of that range, we retest it, and then we break to a new area. In that new area we have a reaccumulation phase, and then we break off up, and then we have a nice correction. Okay, now you can see down on this chart we've got the range formed. Okay, this is the white lines. We broke down below that, literally sprung right back up in this candle, ground down for a bear trap, and then we come up, we move to the top of the range. Trap traders, this was a CMA gap close or fair value gap, can't remember, and then we break out of the range. Now we move up, and look at this, we have a nice falling wedge pattern. We break to the top of the range and come down. Okay, so this is just a simple range, pretty much exactly what we've got here. So we move up into this area and we keep getting pullbacks. Okay, this is just simply pushing back for reaccumulation. You can see some strong candles to the upside here, strong bullish engulfing here. We come down, another strong bullish engulfing, until we finally break out into this new area. Okay, and we had the same thing happening here all the way up to nearly 50k, as you can see, and then we have a correction. Okay, the correction is nearly 10k, so that will be a 20% move. And during the last few candles of this move down, we see this man putting out some tweets, a lot of commentary from this guy. You know, nearly every day, multiple times a day, he was talking about Bitcoin and his opinions. So take note.
We've seen Bitcoin double in anticipation of being wrapped up into an ETP, that's a cousin of ETFs, that was supposed to bring in many, many new investors. Billions upon billions of dollars came in to run ahead of the suckers who would buy the ETP when it was launched. But you know what? Here's one that shocked me. A sucker isn't born every minute. The launch has been tepid, to say the least. In fact, there's been an actual outflow of crypto ETP money for the past few days. Overall, less than $1 billion of net new money has come in to these new spot Bitcoin ETPs since they started trading 2 weeks ago, when people thought there would be tens of billions of dollars coming in. You know, the entire market cap of Bitcoin was $487 billion on June 14th when BlackRock filed for their ETP, and then it rallied to $920 billion right before the spot ETP started trading, as Bitcoiners all over the world ran ahead of all the suckers who were supposed to come in and take them out of the trade. Well, now Bitcoin's up huge amount, and the expected boom is a bust. That means Bitcoin speculators are up huge, and the legendary Larry Williams, who predicted the exact top, is now saying that people are getting still one more chance to sell Bitcoin. But then it's all over but the shouting. Man, you know what? You can buy a lot of cashmere sweaters, a whole closet of them with that pricey Bitcoin. But the bottom line, as Wall Street increasingly realizes that it's time to ring the register, ka-ching, ka-ching, I'm begging you to take something off the table if you haven't done so already. It's the disciplined thing to do. I am not saying sell everything. I am not saying get out now. I am saying do a little schnitzeling, and you will regret it.
They're trying to talk to me while I'm working? Go outside, nerd. Get out. Go. I ain't got time to be distracted by your worthless chime-ins. Go on.
So this was the previous Wyckoff accumulation pattern that I posted, and this was during 2021. Okay, now if we was to locate this on the chart, okay, this Wyckoff accumulation pattern happened in this particular spot. So we can see exactly the same thing. We formed that range basically. We have a spring, and at that point I thought this was the test, but it was a little bit early here, and I think we come down for a deeper test. So when we press play on this, you see it went down for a lower test, and then that was the test just there, and we move on up, and you can see by the crosshair it moves to the top of the range, breaks out. We've come down and tested it, and we've tested it a couple of times here. These are all 6-hour candles, and we move on up to the new all-time high. So in the previous video I went over the E9 Discord here. This has got all the trading channels, signals connected to my strategies, etc. And on the left here we can see a new E9 Telegram trading group, and I just want to spend a couple of minutes going over the ins and outs of this. This is going to be a public group. Anyone can come in here and chat. So I'm going to share like videos, bits and pieces in here, and then, you know, if there's any serious people that come in and they're good people, then we can come into the Discord and get involved there. So I want all this done and dusted by March ideally, and we can wrap up these videos because they're boring me. So basically this AI bot is from Pal AI, and I've trained it on numerous different pieces of Bitcoin information, the white paper, BlackRock's information, and we can see here the back end of the Pal bot called Pepe. And yeah, we've just been training it, testing it, making sure that it's coming out with the good information. And we can see here, like for example, the optimal allocation Bitcoin investment portfolio. Now we know that BlackRock suggests quite a cool allocation. So this Pal AI bot is actually located in the channel, and you can chat with it. So if I just go ahead and type in the command here, you can see all the different commands. And you know, I'm not looking to mess about with this at the moment, but just let's just type in a command here, Pal. So we type in here, why is Bitcoin a superior investment products, and we'll see the AI assistant pop up and hopefully give us a decent answer. And what I'll be doing is plug in the back end with a lot of cool Bitcoin info to build up its knowledge. So here it does take a couple of minutes to get an answer, but here we can see the answer, and yeah, looks pretty decent. Bitcoin price action here, and we're just going to go over a couple of comparisons here because this is pretty cool. So on my trading view, I've got quite a few different comparisons here, and I've got this gold to Bitcoin chart here. Okay, so this is basically gold priced in Bitcoin. Okay, and we see it moving down here 99%, and then we retrace back up into these fib areas, see another big move. Look at this move. Okay, so this is 99% move, just this move down here from this point up. We retrace up, and then we erase another 98.85% of value. Okay, 97%, you can see that there. So yeah, basically these blue lines represent the halvening dates. Okay, so you can see the halvening date happen, drops 99%, retraces back up, drops again after the halvening, traces back up, and you can see, okay, so the last cycle we raised 85%, and you can see moved up into the fib areas again. And bearing in mind I posted this last year, you know, depending on where we're at now, who knows. So you can see from the chart here, I've just pressed play, we're following it. So another one that I shared on TradingView was the Bitcoin cycle, and we can see a more detailed area here in these red lines of the halvening dates. Basically, we're running up, retracing, making a floor, and then kind of grinding up to the halvening. And then when the halvening comes, we're moving up into new highs. And you can see here, so the time between the price peaks, okay, so this is the white dots you can see here. You can see this big green measuring box, 4 years, okay, 4 years from the peak to this peak. And now we've got this peak, 4 years, this is the end. Okay, so that's the 4 years. Then we've got the price between the halvenings and the price peak. So that's after the halvenings occurred. How long is it going to take before it reaches the price peak? 1.5 years. Okay, so you can see the light green, halvening, light green, price peak, 1.5 years. So I've done exactly the same here to the price peak. Now, how do we find the high? Well, the price peak is simply the curve. Okay, it's just aiming. So we're looking at somewhere above 150k. So let's look at some other metrics. We've got the time between the price peak and the price bottom. Okay, so these are the two white dots with the red line in the middle. You can see from the top to the bottom 1 year. Okay, so we've got 69k top here and the bottom 1 year, and again here. So each three of the last each cycle, it's exact. Now the time between the price bottom and the halvening. Okay, so we've got the first bottom 1.5 years, second bottom 1.5 years, the bottom 1 point. I mean, what else can I say? So if we go ahead and press play on this, we can see it's following. Nice. So we've got another one here, and it's the comparison of Bitcoin and the US 2 to US 30 spread, and that's basically the spread between the 2-year and the 30-year yield. So you can see Bitcoin as the orange price and the spread as the black. Now, let's break this down. The peak, okay, the high of the first cycle, okay, is labeled in orange on the spread here. Look at what happens with the spread. Boom, spread drops. Now I've just located the bear market, okay, in the red. So you can see this yield, the spread, sorry, is basically dropping as the bear market's coming in, then it increases to the peak, okay. The peak of the second cycle is the peak of the spread. I've got this one here. This one doesn't quite match up as well, but at that peak during the bear market, we saw the spread bottom out, okay, and then turned around. So then the last cycle, we saw the peak at the first peak, not the second peak. So the first peak, which was around 60k, I can't remember, but we've got that coming, and then the bear market, it moves down. So now we're at this point. So let's have a look at what's happening with the spread. Nothing. It's not declining though. Hopefully we're going to see this move up now, okay, and it could move up, just move up to this 1% mark. So moving back to the chart here, so we've gone over a couple of those comparisons. Now let me just put the gold. Actually, let me put the Monero Bitcoin chart onto here. So what we've essentially got here is the Bitcoin price in orange, and then we have the Monero Bitcoin chart, okay, in kind of dark grey here. Now, I'm just going to zoom out a bit more. So here I've lined them up at the best I can, so you can just adjust the charts here so we can display this these patterns. Now, just look at this, guys. We've got this bottom here, okay. We've got the run up in Bitcoin from bottom to top. Now we see something shift here, okay, and at this particular point, after XML has been run up, you can see everything shifts into Bitcoin, okay, and this move down, you can see Bitcoin starts to really rise, okay, and at the top here, we've got kind of like a pattern. This is a distribution pattern. It's quite a good one, and you can see then the value flows right back into Monero. Where it goes from there, who knows? But then we've got the peak here, and then we start to decline, and you can see this decline here. So you can see the decline here, moving down, moving down. So it's still not too sure how to articulate this yet, but we'll get there. You can see the peak here now, okay, Bitcoin, after this has moved down, moving up, and then from this point, everything shifts back into Monero again. So you can see this move up in the Monero Bitcoin price, and you can see the move down in the Bitcoin USD price. Now look at what's happened here. Move down, move up in the Bitcoin price. Now, one thing to note is we are at this bottom level now. This is kind of like a support, and we have dipped underneath it, and the dip underneath it was this push up to 48k. Okay, so just something to take note of. So it gets really cool when I just start to invert these charts. So let's just invert that, and you can see a bit more clearer where and what is going. So let me take that off. Okay, now look at this chart. This chart is much, much cleaner. This is the gold to Bitcoin chart. And you can see this move down here. It bottoms out. And you can see the price is topping in Bitcoin. Moves back up and down. It's basically a mirror image. Okay, and how I can show this more clearly is if I just simply invert it. So that's the price inverted. Look at it. Peak, 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 peak. Bottom, bottom. I mean, look at these moves. This moves bottoms out here, retraces back up, moves down, traces back up. We've got bottom here, almost like a Bart Simpson pattern. Same here, moving up. So these trends are something to take note of, and you know, use them how you will. But I think these are cool indicators to keep an eye on, and you can see, you know, potentially what's going to happen. Potentially have these on charts, and if one starts declining, then you can basically keep your eye open, almost like a forward-looking indicator. Very cool.
What if it's a virus? What if it's intelligent ransomware that self-propagates and buys Amazon Web Service systems so that it can grow when it's successful? What if it starts running A/B testing on itself by hiring programmers to make itself better? Yeah, all of that's going to happen. But what if it's a charity? What if it's an intelligent charity that can detect the emergence of a natural disaster and automatically and instantaneously divert large funds directly to the people most in need without human intervention? And unlike most charities today, 100% of the funds donated go to those in need. The world is about to change. Self-driving cars? How about self-owning cars? Cars that are not owned by a corporation, cars that are a corporation, that pay for their electricity or gas maintenance and leasing fees by giving rides to human beings who pay them in cryptocurrencies. Imagine software such as intelligent articles that propagate across the internet as content and expand their reach because people read them, and as a result they're able to buy more hosting services so they can expand their reach. This is not your grandparents' money. It's not your parents' money. This is money that is fully programmable, scriptable, that has capabilities that can be finely tuned. You can specify who can access it and when, how it can be dispersed. A whole new field has opened up, which is now called smart contracts. This system allows people to program the behavior of entire systems that can also manage money. And money is such a narrow word to describe this, because we use things that kind of look like money all the time, but aren't really money. What about loyalty points, tokens, subway cards, airline miles? What about expression of a fan of Justin Bieber with full access to the catalog of music as a token? What about all of the other brands that can be turned into tokens and made into a global exchangeable system directly on the internet through this internet protocol? January 3rd, 2009, the world changed. Since then, more than 1,000 other cryptocurrencies have been created using the same recipe, almost all of them open source, and they're expanding in all directions, exploring every possible niche of this ecosystem, every tiny variation in capabilities and features, creating new markets which are raising funds for thousands of startups around the world. Thousands of engineers, software engineers, developers are training to use this new technology. The internet itself is changing very rapidly. Now we have autonomous agents that are using money on the internet, and these are, in many cases, beyond the controls of any jurisdiction.